Hey guys, how's it going? It's Andy. Welcome to day 2 of the 30 days of dividends. This is a series where I'm going to be talking about 30 different dividend stocks in the month of April, talking about the same things and same general concepts so that mainly for myself, I can understand if this is a stock that I'm willing to invest into, as I've really accelerated my dividend investing portfolio away from the growth stocks. Yesterday we talked about Brookfield Renewable, ticker symbol BEP. I'll link that above right now. Today we're going to be talking about Walmart, ticker symbol WMT, which is currently trading just below $150 and is up 3.6% year to date, with a dividend yield around 1.5%. When you're comparing this to Brookfield, it is a dividend that is half the size. And you have to really have the difficult conversation with yourself for what you're looking for when it comes to dividend investing. There are stocks out there that'll pay a 12% dividend, but are not going to have the growth in the overall stock that something like a Walmart might have. So Walmart is in an interesting spot because while the dividend yield is pretty low, it's on the 5-year range, it's down at 1.47%. The upper range has been as high as 2.9%. For dividend yield, which is the expected dividend based off of the current price, 1.52%. Payout ratio is very low. Walmart is a company that makes a lot of money, and as a result, they have a very healthy dividend. Yesterday, when we talked about Brookfield, we talked about a company that does not have a lot of money right now, but based off of the nature of their business, they're going to have a lot of money coming in the future. Walmart is incredibly stable because they are massive. I mean, everyone knows Walmart. Everyone knows that their business model is incredibly successful. They're able to price out a lot of the competition, and that's why they've done so well over the years. And as a result, they have an incredibly low payout ratio. It's been as low as 18.78%. And even when things have been tough, the payout ratio has still only been 93%. Most of the companies that you look at are going to be well over 100. When you compare how Walmart's done to the S&P 500 since 1995, you see that Walmart has outperformed it with 11.31%, with dividends reinvested, and without dividends reinvested 10.28%. So there's not a significant difference, but every dollar counts when you're investing towards retirement, and a dividend portfolio is one of the ways that you can capitalize on a company that does incredibly well with their stock price, but also pays out a pretty significant dividend. When you look at their past 2 earnings reports, you're going to see a lot of positives. In the last quarter, which came out on February 17th, the news article that I found was Walmart tops quarterly estimates, backs long-term forecasts as it focuses on value amid rising food prices. When you look at Walmart, you're going to see so much stability overall. You're going to see stability in the stock price. It's going to be a low volatility company. It's not going to move up and down significantly every day, but has been slow and steady and outperformed the S&P 500 since 1995. It's going to be incredibly stable when it comes to their dividend. This is a company that has paid it out for a long time. They've paid it out for 49 straight years, meaning they'll become a dividend king next year. But they have a payout ratio that is incredibly low, so there is no worry that the company is going to have to cut back on their dividend yield. And if they wanted to, they can bump it up. I don't expect them to bump it up significantly based off of their track record of the dividend, which in the past 3, 5, 10, and 20 years, 1.89%, 2.95%, 4.81%, 11.62%. This is not a company that has significant dividend yield, but you're going to be making your money based off the stock price going up. And the dividend is going to be something that you're going to take as a little bit of a bonus. So this is not a stock that is going to be one that you're going to hold for an account that is specifically designed to live off of dividends, because that 1.5% probably not high enough because of the amount of capital that you would need to live off of. But for someone like myself that is investing for the long run and has maybe 40 years until their retirement horizon, that's plenty of time for the stock price to go up significantly and to use those dividends to reinvest it and grow my portfolio. You do get the tax benefits of holding it for a significant portion of time, and that's why these types of stocks are pretty beneficial to look at for younger investors like myself. Walmart is hard to beat when it comes to stability, and that's going to be the main reason why I think it's an attractive play for myself and my dividend investing portfolio. Let me know what you thought about Walmart, ticker symbol WMT, in the comment section down below. And if there's a stock with a dividend that you'd like me to talk about in a future video, be sure to leave it in the comment section down below, because all of the 30 stocks I'm going to be talking about for this month have not been decided yet. So if you made this far, I really appreciate it for the like and subscribe button, as it would help my channel out a lot. Thanks for watching. I will see you in the next video.